Market volatility might be over, and of course, the tensions are now starting to ease up. Today, we'll break it down for you and how this affects the crypto market. My name is Paul Barrow. Welcome back into Tech Path. Let's get going into it today. I do want to thank our sponsor, and that's Tangem. This is a place where you guys can get into self-custody, and I know there's a lot of you that are brand new to crypto, and now is the time for you to start to look at self-custody. And the way you do that is just go over to visit Tangem.com, and you can get a card over there. There's a 3-card set that I want you to get. And the way you do it is you set it up with your phone, and it works very easily. And you can start moving some of your own assets off of your centralized exchanges and start controlling them yourself. All you have to do is use our link, get a little bit of discount, and you guys are on your way in 3 minutes to get self-custody underway. Let's go into it today. I want to lead off with this right here because there's a lot of things happening this week other than what's going on in the Middle East. Saylor is expected to announce some more Bitcoin purchases. We got the Bank of Japan. They're going to see a rate decision. We'll see a rate decision, of course, this week also coming out of Chair Powell. U.S. jobless claims are coming in on Wednesday. That's the one I'm really concerned about, and I want to watch very closely. This could put some pressure on Powell. But remember that the Fed interest rate decision also is set to most likely hold. I think it's like a 95%. China's interest rate decision is also coming in this week, and then we've got obviously tensions and tariff policy shifts that could be happening all around the Middle East. So get ready, guys. We could be in for a very volatile week. One thing I would say, and this was something that happened over the weekend, even within my own group of people that trade on crypto and et cetera, and some people got a little bit queasy and they started to step away. In other words, they exited the market. And that's one of the things I'm just saying right now, you've got to be able to deal with these kinds of volatile issues and be able to basically slide through these and continue your strategy, because that's the bigger picture. Iran is seeking talks with the U.S., and I think that's why we've seen Bitcoin coming right back to 107, almost 108. And if this comes through as a potential peace deal, or at least something that would lower tensions in the Middle East, then this could be huge. And it's interesting because the market knew this was coming about 12 hours ago, and it started to see a little bit of a correction there, including the crypto markets. Remember, there was a lot of people pushing for an explosion in the Middle East. One of them were kind of pushing for around a 90% chance, but even with that, the S&P would be down over 50%. Gold would be like, $10,000 an ounce. I would agree with that. Oil prices would be $200 a barrel. Not necessarily what we're seeing in the markets right now, even though gold is still stabilized. Oil is still coming down, though, after a complete reversal. And I think this is something you got to pay attention to. There is West Texas crude. After what we saw was a bit of a spike from around the mid-60s up above $70 a barrel. And of course, the crater is that the flow of oil is still happening down under $70 a barrel. And that's the magical number. 75 and under is the magical number, according to the oil baron who I talk to all the time about this. He's saying get in the $75 barrel is the way to go, because that's going to be continued lower prices. Now, I want to go to this clip first because this is how markets are trying to trace along with what's going on geopolitically. Take a look.
We seem to be on the sidelines. I think the market, the reason we're seeing a positive market reaction this morning is things didn't get markedly worse over the weekend. I think, were the U.S. to get involved, investors would need to reconsider what's going on. But in general, markets don't really follow geopolitics all that well. And I think obviously they're watching the oil price, and oil does watch geopolitics very closely. But from a stocks point of view, I think the market is saying, you know what? Israel's a relatively small country. Multinationals don't have much action going on in Israel, enough to affect their bottom lines, although many do business there. And Iran has basically been out of the world economy for decades. So I think the market's saying, you know what? As long as we stay on the sidelines, and oil stays around here, we can manage this conflict. It doesn't affect stocks that much. If the U.S. were to get involved, different story. Let me phrase it differently. When geopolitics come into fray, equity markets basically say, how will this affect the bottom lines of my companies? And ultimately, in this case, you're not going to see it too much. So if you've been basically involved, let's say in the AI trade, mega cap tech, this doesn't affect your life too much.
All right, so I would agree on the front end of that is that it is fairly contained right now. But if it did get out of hand, then usually it means that you're going to draw in other countries. The one that, of course, is the most concerning is China. If they were to be drawn into this, then that is a completely different story around this. So those are the things you do have to watch out for. This is something that was kind of interesting over on Polymarket, and this is in reference to a U.S.-Iran nuclear deal in 2025. The possibility raised considerably. So if Trump maybe is working on the backside to try to stabilize the region, this would be good in general, mainly because it would keep China out of really in a position where we might get into a global conflict. And that's I think the more concerning factor as we start to see these tensions rise around the world. Now, was the escalation priced in? I think a lot of people were looking at this and saying it's going to be a tit for tat type situation. They're going to strike. We're going to see other strikes. It is fairly zeroed in on a very defined areas. So that in itself does seem to be very similar to what we saw with Iran earlier and also Israel earlier around some of these exchanges. I want to go to this clip because this will give you a model of whether or not the market's priced in. Take a look.
And I think what's being priced in is a de-escalation from here, or certainly not a significant escalation by any means. In our minds, it would be more sensible to price in an escalation, not because we believe that's a base case, but if you look at where equities are trading and the risks that can lay ahead, right, it's very likely that you'll have a better opportunity to buy the market in the coming months or quarters than you do today.
All right, so look at that escalation somewhat priced in. There will be opportunities, and that's the thing that we talk about here on this channel a lot, and that is buying the dips. Getting in anytime you see an adjustment on any projects, stocks, whatever it might be, that you feel very committed to or you have a really good understanding of. That's the thing that I think a lot of investors, they just get a little bit skittish in the sense of being able to commit or deploy capital, and that's something to keep an eye on. Foreign investors, though, this is interesting. Foreigners hold 26 trillion more in U.S. assets than Americans hold. So surely that tells you something, is that they understand where the balance of power weighs in. For the U.S., the imbalance has doubled over the last 5 years. That's a continuation, I think, that we'll see American exceptionalism continue to play out in the markets. Now, there is a lot behind this. Yes, there's other competition, but you're still talking about a U.S. global reserve. You're still talking about a leader in technology. And what's really changed recently is, of course, the move on accepting the bold moves of blockchain. I think that's a big factor going forward. If you look at this chart right here, this is the U.S. market and is beyond dominant when you look at this in comparison of U.S. net in international investment positions. It continues to absolutely explode. Look at that all the way back to the 1980s where it was almost non-existent. Now, if you're an investor, this is good for you because most likely you're reaping the benefits of all these kinds of investment volatility and also injection of capital into the market. So some pretty good moves out there, I think, overall. Biggest event of the week right now is the FOMC. The rate cut decision will happen. Most likely it's going to be, let me kind of zoom in on that, 97.5% probability of no rate cuts. I agree with that. It's most likely going to be the case. Many people were worried that we were going to continue to see an escalation of oil prices. That may actually be disappearing. The one, though, that I mentioned earlier, and that is the job numbers. This is one to watch very closely because this could have a little bit of an effect on Powell and how he responds, because most likely he'll have those numbers, well, he will have those numbers come Wednesday. And the key is how is he going to respond to those numbers if they're going down, meaning there's going to be job loss, but if it's lowering in terms of the pace of job loss, that's the question mark that I think Powell will be able to answer. And if you look at the inflation rate right now on Trueflation, it is starting to centralize around that 2% mark. And if you look at this in comparison to some of the other countries, I mean, the U.S. is actually in a pretty good position. There's the U.K. right there. And then if you take a look at Argentina, which has been able to really chip away over the last year, but in India, very similar, I would say, to the U.S. market in terms of inflation, not necessarily the market itself. But the point is, maybe the global conflicts and the global scenarios that are playing out that create a lot of this market volatility are finally coming into focus. I'm going to go to another clip here because this is where G7 leaders are getting ready to meet in Canada, and maybe this is going to be a venue to get things even keel with a lot of the leaders. Take a look.
Trump got in here late last night into Calgary before flying over to Kananaskis to meet and really kick off this two-day summit so far. And take a look at this year's G7. A couple of things. One is that 5 of these 7 leaders are fairly new to their positions. It's only Italy's Meloni and France's Macron that are sort of the veterans here, although for President Trump it is sort of course, a return to this group. And the other thing to note here is that all of the other 6 leaders have been to the White House, have been to Washington so far this year to meet with President Trump. So no new meetings for the president this week, at least not that we know of yet. But still a fairly dramatic range of issues to be discussed. Trade, of course, being at the top of that list. As you mentioned, the president spoke with reporters on his way here yesterday and did say that he expects, quote, a few new deals this week. We know he has bilaterals set, for example, with Canada and Mexico. So we'll have to see. Those deals have proven elusive so far, but it's one major deliverable we could see.
All right, so elusive deals, but I think in general, Trump is after deals. One thing when you look at him being a deal maker, well, you have to kind of look at some of the things he's doing himself, or at least his company is doing, and this is one of them. This is, remember, Trump and Tim Cook got into a little bit of a tiff, and of course, coming out of that, Trump launches a mobile platform, including possible phones. Now, I don't know. Some of this actually may be an iPhone. I'm not sure. When I go to the website, which is, by the way, who is designing these websites? This is a terrible website. And $47 a month. Come on, guys. You know that's not a good deal. If you go over to the T1 phone, you can see that looks very similar to an iPhone. So I'm going to guess that maybe this is an iPhone rebranded and gold-plated of some sort. But listen, guys, you know better than that. Go out there and get the real phones for the Web3 community. Helium is a great one. If you haven't been to Helium Mobile, check it out. This is a free plan that you can use on one of your phones out there as a secondary line, or if you need to, use it as your main line. And listen, if you're a Solana user and a Solana lover, go over and grab the Seeker. You can get that one for less money as well, like $500. So there you go. This is a much better deal. It is getting into the new technology. I think you just have to let that noise continue to be just that, and that is noise. Trump, though, is doing something that I think might actually catch on, and that is his tech group has now filed to create a Bitcoin and an Ethereum ETF. He has elevated Ethereum into the same ETF with Bitcoin. This is an interesting move. Will we see other people, other companies, other institutions start to maybe go this direction and combine these? Ethereum large addresses are also shifting. This is a big deal because this will continue to push the price of ETH and what we're going to see in terms of volatility, I think, against Bitcoin into the positive scale. And if you look at this right now, addresses with 10K to 10 million in ETH have collectively dumped 9.43 million in the same time frame. That's one thing. We're seeing that. And of course, you have to look at the growth of where the supply shift is starting to move. One thing to notice, though, is this right here. ETH is now outperforming Bitcoin by almost 15%. And this is starting to move in the right potential, especially if we start to see momentum in the market starting to move with it. So be on the lookout here for Ethereum. My friend Ivan Aldo would probably tell you, very bullish on ETH. He's probably saying, yes, we're going to see that $4,000 or the $3,000 ETH come in very tightly. Other things, this is Joseph Lubin responding to what's happening on Wall Street, because Wall Street is starting to wake up to the idea that there might be an ETH MicroStrategy. Well, let me explain what that is. If you look at Tom Lee, and we've shown Tom Lee, very big fund manager, fund strat. You guys will recognize him. He's always out there on CNBC, Squawk Box, you name it. And he mentioned in a couple of things here. One, of course, is Semler Scientific. They are holding ETH, along with the comparison of what's happening with Sharplink Gaming, which is one he's tweeted about consistently. And then, of course, Joseph Lubin, who is on the board of Sharplink Gaming, simply says Wall Street will care about one thing: consistent number go up. And that, I think, is the one thing you have to watch, because what does ETH do? It yields rewards. And that is something, it's almost like a dividend built into this. So imagine if these strategies start to play out in more of the Wall Street types. I think Tom Lee is early, and he's going to get noticed very quickly. If you take a look at SBET, the stock they were talking about, after it had a crater last week, some of that was FUD, but the point being is it started to recover, and this is a stock that is being shorted dramatically. So it completely wrecked the shorts over the last day, trading at around 13 bucks right now, up considerably from about 9. So nice moves on that one. The other one I'm watching, of course, is Ethereum, which continues its upward trend right now, recovering slightly. right now trading at about 26.32. And you got to keep an eye on what in general, if you compare this to where activity is going to start taking place. Some of the things I am still watching in the traditional stocks. Let's take a look at Circle. Another big spike right there. Let's take a look at MicroStrategy holding steady. And then look at Robinhood. That's Robinhood on its way to probably going to be 85 bucks. Again, getting very active in the crypto space, and I think it's paying off. And remember, they've got a lot of things happening very soon in the Robinhood ecosystem. Let me know in the comments down below what you guys think is setting up for a epic run. Drop them down in the comments. If you're not in the Diamond Circle, get in on that. And of course, check me out there on X, @Paul Barron. We'll catch you next time right here on TechPath.